And research experts based in London, Exotix Partners, recently put their searchlight on Nigerian banks and noted that the year has started off quite well for banks' bonds. It noted that the indicative mid-size spreads are tighter than at end of 2017, and solid full-year 2017 results releases could mean bond market performance remains strong in the near term. I'm now being joined by a research analyst at Exotix Capital London and the author of this report, Tolu Alamutu. Hello, Tolu. Good afternoon. Thank you very much for joining us.
Good afternoon. Thank you for having me.
Now, you noted that 2018 has started well for Nigeria bank bonds. However, you think that full year 2018 performance is unlikely to be as strong as last year. How so?
Okay. Well, last year was an extremely strong year for bond market performance in general in emerging markets, and that was shown in the Nigerian bank bond performance. We had a number of bank bonds that were yielding 13 or even more % at the beginning of 2017, and that's just no longer the case. I think the highest yields that are available now are in the high single digits. So our thinking is, because you've already had the valuation adjustment over the last 12 months, it's unlikely that you will see very, very strong performance this year.
Now, you and your team, together with a group of investors, visited Abuja and Lagos. What key risks did you see?
Right. In our meetings, both in Abuja and Lagos, I think there were three key things that came up. The first risk from the bank's perspective is yield. So, as you will know, a lot of the Nigerian banks have invested in Nigerian government bonds, and that has been a profitable trade for the banks. But the concern now is that the yields on those securities are going down, and there are less of those securities available because the Nigerian government is replacing local currency denominated bonds with foreign currency bonds. So there's less of an opportunity to make money on holding government bonds now. The second risk is not something that Nigeria can necessarily control directly. It's the oil price. And there is a concern that if we see another significant drop in the oil prices, that this could have a negative impact on the Nigerian banks. Obviously, Nigeria can control oil production, and there are some concerns about militant activity, but that seemed to be less of a concern now than it was 12 months ago. The final concern that came up in our meetings was the elections, and just to do with the uncertainty surrounding that, because it's obviously not clear who will be running in the main opposition party and who will win the election.
And what were other key findings?
Pardon?
What were other key findings?
Key findings. Well, the other things that came up in our meetings included conversations about asset quality at the banks because of the bank's exposure to companies like Nine Mobile and other companies that have run into a little bit of difficulty. Clearly, the Nine Mobile situation is being resolved now, so maybe later on during the course of the year we will hear some positive news on that exposure. And apart from asset quality, there were also questions about FX liquidity, but definitely not in the same, it didn't receive the same focus as it did 12 months ago, which is encouraging because clearly FX liquidity has improved dramatically in 12 months, which is a positive for us.
Now, in all of this, what overall message did you get? What does the future hold for the banking sector?
I think the overall message was that major banks have coped very well with the challenges of the last 12 to 24 months. Profitability in 2018 may not be as sky high as it was at some banks last year, like ROEs of over 30% and so on. But performance should still be decent this year.
Thank you very much for your time, Tolu. Tolu Alamutu is research analyst with Exotix Capital in London. And Senegal could endanger its low-risk debt rating if the West African nation doesn't retain some of the $2.2 billion that it raised through a recent sale of Eurobonds to finance next year's budget. This is according to the International Monetary Fund. Now, Senegal sold 1 billion euros of notes on March 6 and a separate $1 billion tranche on the same day, which lifted the nation of about 15 million people's total debt stock by more than a fifth to $10.2 billion. Senegal is in the third year of a policy support program with the IMF, under which the country invited the Washington-based lender to advise, monitor, and endorse its policies. We'll take a quick break, and when we return, African leaders signed the trade agreement without Nigeria and South Africa. Details in a moment.